What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 16th of 2021. Well, folks, I hope y'all are having a fantastic day wherever you are, and I want to cut straight to the chase here today and spend some time to dive into the current state of the market and ask a very important question. After a near month of sideways price action in cryptocurrency markets, are we more or less confident that this is a mere correction or a full scale beginning to a bear market, expecting a full 80% correction in the market? Well, as I am going to be rambling throughout today's video, I want to save you guys the time of answering that question, or at least understanding where I stand. And I can only hope that you'll stick with me as we go through and diving why I currently believe it to be the case. All right, so no beating around the bush. I'll go ahead and be transparent with you guys. I think very clearly that the market has sent a lot of clear signals by now that this is a mere mid-cycle correction. This is not a bear market. Now, I want to go ahead and spend a little bit of time to talk about some principles that can help us to get to that assumption. Some maybe we've talked about once or twice before, but a lot of this is going to be an element that we haven't visited for a long period of time or haven't looked at in this fashion. So let's go ahead and we'll dive into it. Now, we will be talking about, the yckoff method, which I know everyone's been buzzing about as a recent, and I'll dive a little bit into my thoughts on that later on. But I want to go ahead and just analyze price, as we tend to do here on the channel from time to time. So the first thing I want to talk about is Bitcoin here. We're sitting here around 39,000. We had our lows here from the pullback of nearly almost exactly 30,000. And then we also had our previous all-time highs here on April 13th of 2021. It's crazy what 2 months can bring to the markets. An all-time high peak, the low of the correction, and then nearly a month later, not a full month later, but nearly there, we're still within this kind of sideways range. Now, a lot of people are focusing on both, as I mentioned earlier, the yckoff method and stuff, which we'll take a look at in a bit, talking about the distribution and accumulation patterns. But what I really want to focus on here is basically what we can see in regards to price. Okay? This range here that we've been consolidating in for the past month since the worst of the correction between 30,000 to 42,000 is generally a price range that's played a lot of historic significance for Bitcoin as we were going towards the upside. So we can see here, for example, that this is where we broke past, for example, we came down over here, broke past 20,000, which is the previous all-time highs, rallied up here, more than doubled to 42,000, and came back down as a range of support before completing the rest of the, what I would call basically the secondary wave of the cycle, right? Now, what's very interesting, what we've talked about here on the channel a lot, is that it tends to be that in any cryptocurrency market, any traditional market in a lot of ways, when you have an asset that is like Bitcoin that makes such great returns, that breaks through its all-time highs and more than triples in price, you're going to have not only multiple waves, so I would say there was one wave here and a secondary wave here, but we tend to come back down during corrections, no matter how distant it is, and make support at the previous range of support after the first wave to solidify this further so that we can not only eventually revisit back up to the previous highs of price, but hopefully find a way to break even higher, right? To break out to new all-time highs and continue the cycle, right? So again, just trying to understand very clearly that this is very, very typical of a mid-cycle correction for us to have this nice long period of time where we're sitting in an almost accumulation zone or a consolidation zone, right? This is where smart money is coming in to pick up their orders, because usually if this was a retail-driven market, if this really was the end of the cycle, what we'd likely see is a more dramatic sell-off, a more significant rebound in the interim, and continued sets of lower highs and lower lows. And we're not seeing that. What we're seeing here is accumulation at the mid-range here, which is what we should be seeing if this is a mid-cycle correction. And the one important thing to think about is, people say, well, Nick, this correction was more significant than any mid-cycle correction we saw in 2017. Not to mention as well, this hasn't rebounded as quick as previous rebounds after those corrections throughout the previous cycle. What gives? How can you be so confident this is just a correction? Well, the important thing to understand, guys, is that first off, not every cycle is going to play the same, All right, that's first off important to understand. But second off as well, it's important to understand that this cycle itself, first off, there's two components we need to keep in mind. First off, this market is much more highly leveraged than before. So what we've had are more dramatic upswings. We've had fast breakouts here in the market. We've had significant breakouts back here, for example, in January 2019, or really actually since here in the bottom of December 2018, where we went from 3,100 all the way up to nearly 14K, which was way beyond where we should have been, right? We extended the fastest recovery that we've had since, only compared to the first cycle of Bitcoin, right? When Bitcoin was moving from a couple of cents to a couple dollars, right? This was the fastest recovery than the previous two cycles. And we also had one of the most dramatic mid-cycle corrections from those lows, right? We came all the way down 71 to 72% from relative high to relative low, right? Only then, after 280 days, coming back up, passing that, and then kicking off one of the greatest cycles we'd seen in a long period of time, right? So it's important to understand these points when analyzing the cycle, because it's not exactly like the other cycles. There are derivatives, there is leverage, there is borrowing platforms where people can borrow credit, similar to what we did on the dip here, right? But the problem is that a lot of people use credit during risk-on periods, which exacerbate the returns of cycles and also lead to exacerbated sell-offs, okay? So that's very important to understand. But the second element with all of this as well, that's important to understand about this cycle, is that if we're following history here, we should be playing into the expanding cycles theory, right? And this plays into the idea that, again, over time, and we can actually pull up the BLX chart here to kind of see this, right? Again, we've talked about how each cycle has been getting longer and longer bottom to top. So with this, we're going to have, again, much like we had here, right? We had a period of stagnation in crypto markets where really markets were neutral all the way here from July of 2019 towards November of 2020, right? We really didn't make any progress in price growth until then. But we had also gotten ahead of ourselves here, right? And the same probably goes for here. We probably got a little too ahead of ourselves in the markets. So what's expected to happen after this correction is not an immediate recovery, right? We don't want to see that. We don't want to see, basically, we don't want to see a lack of accumulation patterns that signal that this market and the strategic or institutional money is not going to drive it further, right? That would actually be kind of a bad sign. Might be great because it would get up there quickly, and then we could sell our positions and get out at a slightly lower high. But that's not what we want here. We want the market to be in a position where it can continue to rally going into 2022 and beyond. And I think now we've got the setup here very clearly for that to happen. It's just that this recovery back to 60K isn't going to happen in a week. It's not going to happen in a month. It's probably going to take some time to happen, where we're going to slowly start to accumulate back up here going into the fall or winter and be able to continue climbing higher. Now, I know that that's probably not what people want to hear, but I want to spend some time to emphasize why this is likely the case. I know a lot of people have been going crazy about yckoff, in this case, the yckoff method, which talks about the market maker, I think it's the composite man, basically how trying to understand how institutions or whales or large capital in the markets basically can swing the markets in their favor. They can keep people fearful long enough to accumulate during discount periods, and they can also cause the corrections in the market as they start to distribute or sell off their positions and liquidate their positions in order to lock in the gains that they've made on paper. All right. So again, just to kind of explain this, this is the accumulation schematic or accumulation pattern that you find within the yckoff method. This is what many people theorize we're experiencing right now on this short-term time frame. People have been trying to analyze it. And then outside of that as well, there's also not only the accumulation, but there's also the distribution. And I'll go ahead and show what that looks like. It basically looks like a mirrored setup here, right? And that's what a lot of people are confident we saw here, right? We had multiple kind of higher points here on the yckoff distribution, relatively similar range, and we started to roll over with those lower highs and lower lows. And what's really nice about these accumulation patterns and distribution patterns is they use the same principle we talk about in a lot of regards. We just try to keep it a bit more simple, but it's basically the principle of higher lows and higher highs, and then also lower highs and lower lows to a degree, right? It's not exactly that, but it does generally look for these general patterns of bottoming that can actually trick a lot of investors into thinking that the market still has more room to climb higher, and then also as well that the market is going to be moving lower in this case, right, during these accumulation phases, right? While the smart money is accumulating, you have these slightly lower points here, or this kind of general sideways consolidation that makes people think, oh my God, the market's got more to go down. When in reality, this is the period of time that smart money is starting to acquire. Paul Tudor Jones, for example, one of the most infamous, or not infamous is the wrong term, one of the most famous investors in this case in traditional markets of the last couple decades in financial markets is coming out now, and he's stating that he wants to bump up that 1% allocation of Bitcoin in his portfolio. Bear in mind, a billion-dollar investor is now wanting to have a 5% allocation. He's not the only one. So what's really interesting is that we have a lot of metrics to look at when it comes to what smart money is really doing. And one of them is actually measuring the amount of wallets on chain that hold a certain reserve of Bitcoin, right? Unspent transaction outputs on wallets with certain amounts of Bitcoin, right? Well, what's really interesting is that during this period of time, we had seen general growth and the overall number of wallets as the market moved higher. And what happens is right as we entered into this pattern here, right as we entered into retail euphoria, right, buyers, new liquidity coming to the market, smart money was exiting the positions, right? The number of people with 1,000 Bitcoin started to decline. But the period of time where there's peak fear in the market is the discount starts to go into what we would call the accumulation schematic here, or basically what we have outlined here in this yckoff method diagram. How interesting is it? But that's actually when we set in the low here on May 18th, and we started to see an increase. Not a significant one, right? We've only added a couple addresses here, but we're not seeing a decrease. So the thing I want to emphasize here is that overall, the period of time where you're feeling most fearful, when you're feeling that the chips are up, in this case, like the game's up in this case, Bitcoin's done for, this is when smart money is coming in and starting to acquire. And if you're if you try to keep yourself on a longer term time frame, you can start to spot these things throughout the headlines, because a lot of these traders, once they build those positions, they're going to want to talk about it and use the leverage of their name to support it. Like Paul Tudor Jones is well known for this. Built this position, kind of went on a roadshow and talked a lot about why he was big on Bitcoin, wrote a whole letter about it. There's a lot of people like Paul Tudor Jones who are going to play a role in the accumulation during this phase. Ray Dalio, a lot of the investors getting interested at Bitcoin now and seeing it as a multi-trillion-dollar asset going forward, right? So anyways, the thing I want to emphasize here, and I'd actually like to spend a little bit of time talking about altcoins as well, and the economy between Bitcoin and altcoins. Generally speaking, a lot of people ask me, Nick, what should I look for here, right? Let's just put our opinions aside, right, and just talk about what we need to see in price. Well, really, it's quite simple. We need to get above $42,000. We need a nice solid break at above 42K, and that will probably be the initiation to start moving higher towards higher price ranges, revisiting those previous all-time highs. But the major thing here is this, guys, to not panic right now, and to understand the thing that's going to kill you if you can't build this expectation in your mindset of the recovery taking a couple of months probably, right, to get back to those all-time highs. You have to ingrain that in your head or you're going to go crazy. That's the key thing that I want you guys to know about in this video. It doesn't mean you can't come here to the channel and watch the content. It doesn't mean there's not going to be setups in the market. But for Bitcoin as an asset, we're talking about hundreds of billions of dollars in value that were wiped off here, right? Actually, technically speaking, I think it was nearly almost $1 trillion in this case off of Bitcoin's market cap. Not exactly, but almost. And again, these kind of events take time to recover. They're going to need multi-million-dollar, if not billion-dollar buy orders from investors like Paul Tudor Jones. They're going to need sizable new positions from equivalents to MicroStrategy, right? You're going to need those corporate balance sheet companies coming in and buy up Bitcoin. The good news is we're seeing the signs that this is what they're doing right now. They're accumulating slowly. They don't do it all at once. They don't just hit their, they don't fat finger, that's the term. They don't fat finger the order book or the buy button and just clear through the order book. No, they want to accumulate nice and cheap, right? And they've got serious capital, whereas you and I, if we go and buy some Bitcoin or crypto, we probably don't move the order book much. But if Paul Tudor Jones wanted to buy on spot market 100 million Bitcoin, $100 million worth of Bitcoin, that's going to cause some slippage, right? So overall, they as well as other large-scale investors, they're going to slowly accumulate during this period of time, and that's also why, again, you can start to see these higher lows and higher highs. And if there's enough pressure in the market all at one time, too many people accumulate, yeah, we might pop up above here and start moving higher sooner, right? So that's the critical thing to keep in mind here, guys, when it comes to Bitcoin as an asset, and to understand where we're at, to not panic in this case. The last thing I want to take a look at here, right, as we talked about Bitcoin, expanding cycles, how this cycle differs due to the derivatives and leverage in the market, is just talking a little bit about altcoin dominance. How are altcoins faring right now? Well, they're doing okay. They're holding about right where they were at the beginning of May. This is mainly, altcoin dominance is mainly here due to Ethereum at the moment, as it is the second largest crypto, so it's going to hold the largest weight here. But overall, altcoins are holding okay. They're definitely not, in most cases, dipping below. As we can see here, they're not below their lows on May 23rd. But at the same time, we've set in lower highs here, which is the first initial sign of a trend reversal. And if we were to step below these previous lows, you could be probably rest assured that we've confirmed the altcoin cycle is officially over, and that Bitcoin is going to start regaining significant dominance on the rebound in price that we're expecting across the board in the market. It doesn't mean that altcoins can't go up in US dollar value. It just means that the Bitcoin value, or the move in Bitcoin, is going to be greater to the upside than altcoins in the recovery, right? And I think that that's very, very plausible. There are some people as well that are talking about Ethereum still having steam left, and for the broader crypto market as well to keep making moves higher. We will simply watch what happens with dominance. I haven't made any major adjustments yet. I'll keep you guys in the loop when I do, or when I've made that kind of trend shift. But we're going to wait to get the confirmation, just like we did on Bitcoin, right? We waited for lower highs and lower lows to make any significant major adjustments. So we will keep an eye on it. But overall, guys, again, I'm here as per usual. I'm not panic selling, not, I guess per se panic buying or anything. I've already built some additional positions, as I've told you guys about, in the sense of buying on the discount, but not doing anything right now. Just remaining patient. And sometimes, it tends to be actually, in a lot of cases, that's the best thing to do. So, anyways, rambling as per usual. If you guys like this video, please consider dropping a like, consider subscribing, sharing with a family member, friend who might need this kind of rational, level-headed content. And if you guys have any feedback or any thoughts on what we talked about today, feel free to leave it in the comments down below. Until the next video, though, everyone, I will see you all in the next one. Take care, everyone.